All right, Courtney, what would you do with Starbucks?
I'm actually pretty optimistic here. I would be a buyer of Starbucks. I think the big thing with them is I would not discount their customer base. You actually just brought up here some good points about how they have had a lot of competition, but they have over 31 million active users in their loyalty program. And they've been able to consistently increase price about 7.4% over the last 5 years, which is higher than inflation. And I think just shows how loyal their customer base is, and people still want their Starbucks. I think the big story with them is going to be China. The Chinese recovery has been a lot slower than everybody expected. And if we get any inclination of that starting to pick back up, that would be a good thing for Starbucks. If we don't, you'll see the opposite. But also, I think that's going to just show trends of the overall Chinese economy and how that's going to affect the general economy when you look at the macro sense.
Yeah.
And lastly, just how it's affecting your consumer discretionary items. If consumers are still getting their Starbucks, I think that's a great thing. It's tended to hold up well when we're hearing these other companies report. So we'll have to see what Starbucks says.
Yeah, no, it's interesting to think about kind of, okay, we have crude breaking out, but is that a China gauge? Because then Starbucks, not so much. So maybe they can help clarify things for us. And we'll move on to Pinterest, which is the next name we'll hear from this afternoon. Those shares are now up about 20% this year, maybe lagging some of the other social names. There's been a slowing ad market, but investors are still excited about the rollout of the strategic shopping partnerships with Amazon. Julia Borston, who is in the house today, can give us an inside look, Julia.
Yeah, that key thing there is the advertising market, Kelly. There's the broader advertising market, and there's the question of whether Pinterest is seeing accelerating growth the way that Meta did, and specifically around these areas where Pinterest has so much exposure, such as retail shopping, also furniture, home shopping. So we'll see if they can show growth there, despite the fact that they're less exposed to the travel business, which has been so red hot. Another key area here is Amazon. Pinterest announced a big partnership with Amazon for Amazon to bring third-party ads onto the platform. That was announced at the end of April, so investors are looking for an update to see how that might boost the business and what other partners they might have in the works. And then we're also looking for any guidance around the likes of the content partnerships they've been doing to try to help build engagement, grow user engagement, despite the fact that people are out and about doing things like travel. And, of course, they have some new ad formats as well. The question is how those are attracting advertisers and also delivering them returns.
All right.
Kelly?
And we have CEO Bill Reddy on with Jim Cramer this afternoon. Looking forward to that on Mad Money, 6 p.m. Eastern. Courtney, Pinterest?
Yeah, actually, I think there's a lot of optimistic signs here with Pinterest. This is a platform that has 475 million monthly active users. And these are people who are not just looking for ideas of what to buy, but the ability to buy them. And so the more that Pinterest can actually monetize the pins that they're creating is going to be beneficial for them. And this will be the first earnings report where we're getting their partnership with Amazon, where I think that's probably come to much more of a fruition. I think that's really what people are going to be eyeing. And the other thing is, I think they have a lot of room for growth in the international space, which is currently only about 20% for them. And I think some of those things could very well lead to some additional upside here.
All right, fair enough. And again, maybe a little bit of catch up with the other names in the space. Finally, chip maker AMD, hoping to board the AI hype train. Shares are still a far cry from NVIDIA's year-to-date gains, although not too shabby, up 80%. Christina Partsinevelos has more of what to watch. Christina?
Well, we are expecting some lackluster results from Q2, but like you said, the AI train is pretty close by, and AMD is hoping to get on in the next few quarters. And what I mean by that is for this upcoming quarter, we're expecting revenue of $5.3 billion. To put it into context, NVIDIA is expecting $11 billion during that exact same time frame. So the three areas of focus for AMD, has PC sales continued to bottom? That's what we saw with Intel. The second area of focus is a major concern, data center sales. We saw with Intel that there was cannibalization. In other words, IT spend dollars are going towards the more expensive AI chips, and that means less money for data center chips, which is what AMD makes. And then that third point, I guess the most important for that AI train is AMD's AI chip that is expected to come out in Q4. As long as there's no lags, they're only sampling in Q3. That's why there's some concerns. But that is where you're going to see maybe some earnings revisions going forward. If you're looking at on your screen right now, you're seeing a 3-month chart for all three names. That is part of the reason why AMD is not as high as NVIDIA just within the last 3 months, because there's still a lot of uncertainty about the near term for this name and whether it's going to be able to follow through on the AI push within the end of 2023, let alone even just the beginning of 2024.
And we continue to hear, Christina, thank you. We continue to hear a lot of investors like Rich Bernstein, Courtney, cautioning people about chasing some of these more high-flying tech names. What would you do with AMD?
Yeah, and I also would be cautious about chasing these names here. This company has done fantastic. It's up over 80% this year right now. And I do think it wouldn't be a surprise to see some sort of a pullback. But the big thing with them is going to be artificial intelligence. As fantastic as they've been doing, they have not had nearly the AI run that the likes of a NVIDIA has. And so I think that what we're going to have to see from them is some sort of, tangible evidence that they are going to be having these AI chips coming to the market and how soon that's going to be able to be monetized. But I think with a lot of this, you are seeing that a lot of this artificial intelligence might be a longer term story than you're seeing get priced in the short term in the stocks, which is what I would caution against. Short term, however, if Intel was any indication, you may be seeing some of that PC demand coming back, which could be a good thing for them in the short run, but I'd still remain cautious here.